Hey guys, welcome back to my channel, and today I would like to go over the different kind of insurance that you're going to need when you're buying home. Okay, and especially if you're a first-time home buyer or haven't bought a home for a while, all these terminologies can get very confusing. Okay, what insurance you need, PMI, escrow, earnest money, clear to close, down payment, closing costs. All these terminology can get very confusing. So hopefully this will clarify for you really quick and bring you some value. Okay, so insurance. So what do you need? What's required? What can you shop for? All these can be very confusing. Okay, and maybe you'll be scratching your head and wondering if I do need these or what are these. Okay, so the first one is what we call homeowner insurance. Okay, so before you can close on your home, you get what the lender is going to call a clear to close. When you get a clear to close, basically you're just waiting for the closing date. And before we get to the clear to close, the insurance is going to want you as a home buyer homeowner insurance. Okay, so homeowner insurance, what that is basically it just to protect the home, because the lender is borrowing you money, so they're going to keep your home as collateral. So they want to make sure that the home is in good condition. Okay, so what that means is home insurance is going to cover anything like, for example, hail damage or fire onto your property. Okay, and this is something that you can shop for. Most of the time, my buyers, I always recommend to check with their auto insurance, property casualty insurance. Check with their auto insurance. For example, if you have American Family, State Farm, Progressive, whatever it is, just check with them, because most of the time a lot of these companies are going to have packages or bundles which you can bundle up, and if you do, you get some kind of discount. Okay, so you want to check with that. And how it works, the premium is it's going to your insurance agent going to ask you about they obviously going to get the address from you and the square footage and different features in the home, and then they give you a premium. So definitely that's something you can shop for. Okay, it doesn't hurt to check a few places as far as the home insurance go. Okay, so the next one is so this is required. The next one is private mortgage insurance. So this may or may not be required depending on the amount of down payment that you put towards a home. Okay, so for example, it's commonly referred to a PMI or private mortgage insurance, and with this is, if you do have this, you want to get rid of this as soon as possible, as quickly as possible, because this does not do anything for you. It does not benefit you. It doesn't go towards your interest or principal of the home. This basically just protects the lender in case you default on your payments, the mortgage payments. Okay, so typically, when is this required? If you have a down payment of less than 20%, your lender is going to require this private mortgage insurance. Okay, and I don't have the calculation formula for this, but if you want to talk to your mortgage lender, they'll be able to calculate this out for you. Okay, so private mortgage insurance, it is required if your down payment is going to be under 20%. Okay, and you want to get rid of this as fast as possible. Once you buy the home, if you do plan to, let's say, do some renovation or remodel, and if you feel that your home value will go up after the remodel, you can talk to your lender, get an appraisal, and then if that does work out and you refinance and that amount goes over that 20%, you can get rid of that also. Okay, otherwise, once you go to closing, your lender is going to kind of give you like a amortization chart that will kind of give you an example of when that 20% will be met, how many years if you just make regular payments. Okay, so the last one here, this can get very confusing. So when you buy a home, you might get solicitations from insurance company for what's called mortgage protection insurance. Okay, so this can get very confusing. Basically, what mortgage protection insurance is, it's just life insurance. Okay, it's a fancy term for what we call term life insurance. So how this works is, how term life insurance is different from regular, let's say, permanent insurance is. Permanent insurance includes like universal life, whole life policy. These permanent life insurance, they have what's called cash value inside. It's cash value. It's kind of like a savings inside the life insurance. Whereas term insurance, that has no cash value. So term insurance, exactly what it is for a period of time. So for example, you could buy term for, let's say, 5 years, 15 years, 20 years, 25, 30 years. So, for example, in this case, if you're taking out a mortgage for 30 years, you can buy a 30-year term. Okay. So, for example, if your home is let's say 300,000, then the term insurance 30 years, you basically just buy a 300,000 term insurance. Okay. So, keeping in mind, I did used to be an independent life insurance agent. So you want to keep in mind what we call a needs analysis. So when you are looking to buy just any life insurance in general, but if you're looking for mortgage protection insurance, it wouldn't be a bad idea to calculate all your expenses and debt. Okay, so what I mean by that is obviously you're going to have your mortgage that you pay off, any debt if you have minors, any kids at home that you want to, let's say, pay for college. If let's say, for example, knock on wood, if you're no longer around, that money will be there to basically cover the mortgage, pay for your kids' college, and any debt that's remaining. Okay, so hopefully that helps. Mortgage insurance, protection insurance, it is optional, but I do recommend it. As with any insurance, whether it be car insurance, health insurance, if you do need it, it's there for you. If you don't need it, that's great. But the last thing you want is for you and your family to go back financially if anything, let's say, does happen to you. If you get, like, let's say for auto insurance, you get into an accident and you have to go back financially, set you back. So that's something that you do not want for your family. Okay, so hopefully this helps. If this video does bring you some kind of value, please click the like and share, and we'll see you in the next video. Thanks, guys.